option. Our guest says that after rallies in the first half of the year, returns in the second half are likely to be weaker. And he has some investing ideas for us. Let's bring in Sid Mokhtari, Chief Market Technician at CIBC Capital Markets. Great to see you.
Great to see you.
Apparently, when the American market does this well in the first half, it can be a good omen. But you think things may not be quite as rosy in the second half?
Very much. I think we will be able to build on the back of what we have done so far, but the return, profiling is not going to be as good as what we did in H1. We looked at the entire history of the market that have had returns in excess of 14%, as we did for SPX this year. In the follow-up, H2 or second half, returns weren't as good. So H2 minus H1, 99% was negative.
Oh my goodness.
So that means, your return backdrop was not. Average return is about 5.7%. Median return is about 9% for H2. So I would say that's how we would look at it.
And we're looking now at TSX seasonality. What is that telling us?
So what we did, seasonality, we adjust everything for momentum, and then we adjusted for the cycle of election years and what it looks like. TSX and the U.S., it's very front-end loaded in July, but gains of July historically are to be erased by the time we go into September. So I think it's best to remind ourselves that we're entering a softer part of the year, particularly in the year of election in the U.S. And Q3 tends to have quite a weak hit rates from a performance perspective.
So July tends to be okay, but then August and September not so good.
Very much so. It's very front-end loaded, so bulk of the return would typically come into the first few weeks of July, and then back-end is typically softer. We find that breadth is becoming narrower and narrower. It's been a frustrating condition that market has been experiencing over the past few months. At the risk of reiterating the obvious, it's just being led by a group of stocks. Until we see evidence of a shift from that condition, we should be of the view that as we go into this weaker part of the year, odds are that we'll probably have weaker hit rates.
I may have misheard you there, but I thought that when the U.S. market does very well in the first half of the year, it tends to go up even further in the second half of the year.
Total return would be good by the time you come into year-end. H1 at 14% plus historically shows that H2 returns do not match those of H1. So like I said, your full return year is actually pretty good. It's positive. This is a year of election, historically 75% hit ratio. So odds are that this would be a positive year. It's quite high in our opinion. But I would say, your second half of the year will have difficulties in Q3. We'll have a backup attempt stronger into Q4.
You have some stocks that are among your top ideas for July. Can we start off with Gibson Energy, GEI? What's the chart telling you there?
The chart looks good. I don't know if we have the chart for it, but I would say Gibson on a weekly basis, very much similar to its peers, did break out in February, showed follow through into April, May. It does have some issues with the hurricane, as we all know, but I would say the dominant trend forces for Gibson is positive. Seasonality is positive for it, and I think however I look at it for you, I do think this is a name that should be able to continue to push better toward 2450 plus level on the upside.
Yeah, because of course, as you know, they have Gulf of Mexico assets, and they could be disrupted. Atkins Gray-Elise, the former SNC, you think the chart there looks promising?
The fundamentals have been great. There's been a good uranium theme behind it. The structure of the chart is a bull flag continuation and uptrend. We think dips in ATRL is a good buy opportunity. The theme in the whole, called it engineering, has generally been strong, and I think this should be able to continue to benefit from that trend backdrop.
That's interesting. Yeah, you mentioned the nuclear expertise they have. Yeah,
I agree.
Yeah. Gildan, this is a tough chart, I guess, because they've been through all that boardroom turmoil. But what is that chart telling you?
This is a carryover name for us on a monthly basis. In our top 10 ideas, we often try to come up with names that have positive rate of change in the relative strength, positive momentum, positive catalyst, if you will. Following that whole saga, as you mentioned, we saw the stock breaking out and continuing, and there is no evidence sense of moving away from Gildan, I do think this is a name that should be able to participate on the upside. I mean, at least in our work and fundamental work that CIBC covers, that's a good name for us on both sides.
And what in particular would attract you about that chart? It's returned to a previous peak, it looks like.
Exactly. I mean, given this magnitude of momentum, we do assume that previous peak should also be pierced to the upside. We haven't reached call it the stochastic or weekly RSI overbought condition of those of the previous peak. So however I look at it, I do think we should reach and we should be able to pierce through.
But is it classically a bad sign if a stock can't get back to a previous peak?
Typically so. I mean, you want to be able to make higher highs and higher lows, or to be able to probe a new high and be able to, show enough demand that takes you past that. We also look at the relative performance of the stock. Gildan has a very good relative performance against the TSX 60 index, and we run call it a rotation quad, and Gildan continues to show up in improving leading, which typically brings us into a portfolio analytics in terms of longs.
And then finally, CCL Industries, the packager of consumer goods. I think they're in labels now. Why do you think that chart looks solid?
I mean, it's pretty much of a range stock that has broken out of its range. This was a big consolidation for the past 2 years. Showed up quite well in our process. We checked it with our team on the fundamental side. They do have a lot of good positive catalysts for name. So we do like a stock that has both technical as well as fundamental backing, especially when you see breakout conditions like this. It does have a good seasonal backdrop too, so I think that's a good name to own as well.
So that's interesting. So sell in May might imply get out for the whole summer, but you can July it can be a decent period.
I think July, it's very front-end loaded. You're going to be able to see continuation of what we've had so far. I think it was May that created April that created a good trough in the market and lifted stocks into May and June. But I do think July is a month that you want to start backpedaling in terms of your excessive longs, if you will. High beta probably going to have some difficulties as we go into the balance of the quarter.